any sign here on the labor. I don't want to root for it to crack, but at the same time, it feels like the Fed just thinks everyone's going to be like, we can lose all these banks and there's not going to be any big spillover effect. I don't know.
First of all, thanks for having me on your show. I'm going to use the same word we just used in the last segment. It's a choppy job market. We're seeing layoffs. We're seeing hiring freezes. We're seeing old established companies putting a hiring freeze because AI is going to take over jobs. Yet we saw 49% of the recruiters reported salaries went up. We saw in New York City, New York is now increasing the minimum wage. So there's this crazy trend going on now. You looked at the Joel report, and the hiring numbers for February and March were the same, but the quits were actually coming down. So I think the year-over-year quit, according to the Joel report, was 15% fewer quits in March than they were of 23 to March of 22. So the hiring is staying consistent. The quits are actually coming down. But we also saw that I think 38% more people reported of the candidates having 3 jobs in the past 2 years. That actually means that you can see here now, I lost my job, maybe I was laid off, but I can get rehired really quickly. So we're seeing, and the application volume is actually increasing. So there are fewer recruiters actually handling more jobs.
So that tells you what in terms of how quickly we might see payroll gains go to payroll losses?
Yeah, so look, I think there's still, and the disparity here is the different types of jobs. We've had lots of openings still on the service side of the economy. And so it's the knowledge workers that are getting laid off and the replacements of the service-oriented jobs. The travel jobs were up according to our index. So you're seeing these layoffs, what you're seeing on the screen here now. Knowledge workers, real knowledge workers. Now, many of them are finding jobs quickly, and we saw some really good statistics about that a couple of months ago. But we're seeing changing priorities. Work-life balance is coming back up here now. We saw what reasons for leaving were management-related, not just compensation-related, but management-related.
And kind of if we extend that out, then what do you expect people to experience in the workplace? Okay, so this is now May, as we kind of move through the summer months.
I think that, it's almost this management's going to say, hey, look, you have to do more with less. There are fewer of you, right? We've right-sized the company, or we've laid people off to adjust to the economy to ensure that we're driving profitability. But now you're going to have to do more. And you spent that pandemic time of almost doing less, right? I had more free time, more availability, and now I'm going to be pushed to actually getting more done and being more efficient, more effective. Sort of the Elon Musk approach of, hey, do more with a lot less. And I think there's going to be that pressure, which is why we really saw work-life balance sort of come up as a higher priority this past index than compensation.
And that goes back, the remote work issue, obviously, this one was for so long a driving factor in the labor force. What's happening with remote work now?
So we actually saw that pick back up here now, and that probably goes with sales, right? Sales has always been, and again, not always, but many sales roles have always been remote, right? You want the salespeople out in the field, and we saw that actually hit the #1 industry segment that the recruiters were recruiting for. So not surprising that remote would tick up if people are focused on the sales side, and healthcare was down, and healthcare is typically an in-person role.
All right, Evan, appreciate your time today, and we'll see, drum roll please, for the morning and for beyond.